Okay, good afternoon, traders. Welcome to Paul's Monday Market Update, 154 for the 16th of September, 2024. I hope you've had a good weekend. I hope you enjoyed last week and are ready for an interesting week ahead. As always, before I crack on, if those of you here joining us live, if you could just confirm that you can see the slides and you can hear my voice, that'll make for a good start. Knowing the technology is working for us, would appreciate that. Fabulous. Thank you. Thank you very much. All right. That's brilliant. Much appreciated. As always, if you're joining us for the first time, all right, the Monday market update is literally, it's just that. It's me flying through as much as I can get in the next 25, 30 minutes as I just try and share with you some insights, okay, looking at strength and weakness within FX markets. We look at a few charts that might be of interest. You might want to add to your watch list, and then we'll have a look at the live market and see what is going on. As I said, it's a market update, okay? It is not a signal service. It's not trade recommendations. It's just what I'm seeing, and that might be of some interest to you if you want to add it to your own watch lists. As always, you are very welcome here, but just remember you are responsible for your own trading decisions. And if you want a bit more education, every Monday, okay, I do a webinar for active trades, 2 o'clock every London time, Monday Market Matters. This week is on the trading the FTR, the fail to return setup. If you want to join us for that, you can either register on the website, or as you can see, there's a QR code there that you can take a shot of, and that'll take you to the sign up if you wish to join us. Okay, but let's crack on with our stuff and let's dig into the main elements. Okay, so I appreciate if you're new to joining us, or if you're new to trading, this might appear maybe a little bit overwhelming, but it's not really. Once you get to understanding, all it is just the work I do at the weekends to give you myself a little bit of an insight. Where's the strength? Where's the weakness? So I can appropriate my time, energy, and resources for the week ahead. And what I started to do on at this weekend is just make a little bit of a video as I go. So for those of you on the VTP, okay, or on the VTP website and Facebook, etc. I will try and post it on there. So it's just giving you a little bit of insight as I'm doing the STAM, what I'm particularly looking at and interested in. And if that is of useful to you, then let me know and I'll keep doing it. But alternatively, here we are. We're into week 38 of the year for the 16th of September. Where's the strength? Where's the weakness? Is there any change? Well, not really any change. We still have Japanese yen, okay, top of the pile, with Swiss franc tugging along in the second place. Need to take note that this is a week of central bank meetings, okay? So we've got FOMC on Wednesday, we've got MPC on Thursday, and then Bank of Japan on Friday. So for ourselves, okay, here in the UK, we're not expecting an interest rate cut. This meeting, if there is one, that'll be the kind of cat amongst the pigeons. And the same for the Japanese, for the Bank of Japan, okay, whilst they are in a different trajectory than the rest of us, nobody's really expecting a raise in interest rates this week. So, of course, if there was to be one, once again, that sets the cat amongst the pigeons. But the major one everyone will be looking at is US dollar on Wednesday. Everyone's pretty much ready for and baked in that there will be an interest rate cut, the first one for many years. The question has been over the last couple of weeks, is it going to be 0.5% or 0.25%? I think most people, after getting through last week with the election debate, CPI, PPI, I think most people are kind of settling on the fact that there's more likely to be 0.25% basis point cut rather than 0.5%. Once again, if that forecast isn't met or it's changed, well, then that is what creates volatility in the market. The market will respond accordingly, and that's actually always what we're interested in. How does the market respond? Close to home, sterling is still sort of tucked in third position, where it has been really. You can see there mostly for most of the last 5-6 weeks, and you've heard me banging on about this, okay, for months, about how sterling's view of strength is more about the fact that others are weak. And I suppose if the Americans do cut interest rates and we hold ours, then the question starts becoming about who's going to hold out longest in terms of interest rates for those differentials. Remember, the ECB, they cut last week. We expect the Americans to cut this week, but we're not expecting at the moment to cut till I think it may be the November meeting. But all of that holds up sterling, right? As I said, it's more about others rather than our own particular manoeuvres. But it's holding there. Euro, okay, is holding in fifth. Okay, interest rate cut last week. I suspect what will happen is we will see the real response to that after what the Americans do later on this week. Those condols, okay, they're still mincing around, okay, towards the bottom of the pile, and the bottom of the pile is held up by dollar. And I thought dollar might have been putting in a double bottom last week when we spoke and stuff, but it didn't follow through on that, as we'll look at in a moment. And I thought that we would probably have dollar sort of coiling up, all right, for the next couple of days just in front of FOMC, but clearly the people weren't interested in that either, as we will look in at the moment. And certainly you can see here, this morning has been pretty much kind of like sell the dollar against everybody. That's been the sort of the sort of kind of main thrust of today's session this morning, which we will look at in a moment. Certainly compared to where we were a couple of weeks ago, where everybody was sort of a bit worried. After the let's call it like the Bank of Japan debacle at the end of July, start of August, and then when everyone returned first week back, there was a big sell-off. It's amazing to see how quickly that has reversed and changed, and you can see that on the charts itself, which we'll move across to in a moment. If you look at that, all of those kind of major ones there, they are all kind of screaming out strategic buys at the moment, and I suspect that's what will happen. We will flood through if we get the kind of interest rate movements that we're expecting this week from those particular central banks. Even like Aussie is full on there as well. The one that remains is oil is still bearish. Okay, we talked about this I think a couple of weeks ago, and sort of was saying that looking at West Texas and Brent, they were drifting, they were dropping. We were expecting them to trade down towards 70, which they've gone before. Okay, that's a reflection of quite a few things happening. Some of it would be a reflection of the of perhaps perceived demand, or rather the dampening of it within the global economy. And this is the kind of strange juxtaposition we find ourselves in, is that there's a couple of mixed signals that are coming out. Okay, and we're trying to decipher them and navigate our way through them, but more of that later. Gold popped, all right. Silver popped as well. We'll look at them in a moment. Okay, so everybody's happy, all right. Everybody's happy. Bitcoin remains a tactical short, but actually, as we look at the price action, it dropped and bounced off the 50 really quite nicely. It's rallied its way up strongly from there. VIX is a bit mixed, okay, but not a real shock there. So lots of strategic buys. It will be interesting to see whether how markets react to Wednesday will be whether that confirms and that we push it, and whether it does enough to sort of float markets higher for the next 6 weeks, because that'll do it for Harris and May. I think if the market is strong going into the election, it doesn't impede Harris. Let's say that. Okay, if the market was to roll over and crash, that wouldn't look good for her. But I suspect that it'll get floated. It'll get floated higher, or they will do everything they can with that. All right. Okay, let's have a little look at some charts of interest. Okay, as always, I don't claim to be an equity specialist, but we all like looking at charts. We can all learn something from charts. And there might be something that, as I said, you might want to add to your own watch list. This is RTX. Okay, you might not know who RTX are. RTX are better known by their company name of Raytheon. Raytheon are a defense company, and in particular, they make missiles, rockets, okay, Patriot missiles, AMRAAM missiles, like AIM-9X, okay, they are our thing, and a whole host of other things. So if you want to put a rocket in the sky, well, then invariably it's normally a Raytheon product. And you can see that actually, they had a little bit of a bump at the start of the Ukraine war, but really, about a year or so ago, we kind of flushed down to $70, and you can see it's just been in a great trend since then. And those of you who join us weekly, you'll know I will constantly talk about defense companies and how how the Ukraine war has been a fantastic way for the American government to basically to do its own form of kind of funding in terms of funding money towards aerospace defense companies. Okay, and you can see that chart there is a really fantastic example of how that worked for the last year. Okay, going from 70 trading up to $120 there. Okay, but what we can see is that the week before last we put in I don't think it was if I remember right, I don't think it's an engulfing candle, but it's certainly a bearish candle after a tweezer candle after a good run up. And it has been a good run up. And what we are seeing is, we have seen governments putting in orders to restock their missiles because, well, maybe they think they might have a need for them over the next 6 to 12 months. But what also has happened, or what kind of has been rather quiet, is the fact that Raytheon have had to put $1 billion aside to pay fines, and I think they paid the first fine of $200 million last week. Okay, and why was that? It's because it turned out that they were selling technology to the Chinese and stuff. So nice work, lads, and stuff. They found that out, and this is one of the challenges you have. Is that, as I said, Raytheon pretty much, the sole supplier of probably 80% plus, maybe even 95% plus of missiles for the West. So they can probably get away with selling tech to China because actually, what is the West going to do? The West isn't going to basically ban them because there's nobody else making missiles. Maybe a bit of NVDA, sort of subset of bit share of space, but generally, if you want a rocket, it's going to have to be Raytheon. So they thought they could play both sides of the trade, and they've been caught. And people might say $1 billion a big fine, but really, in the grand scheme of things, it's probably chicken feed and stuff. It's probably kind of like the chicken feed fine that we'll probably see Manchester City get. But anyway, we digress. But there we go. I'll be interested to see how that Raytheon now at 120, how it does. Whether those fines take the sheen off and people start taking profit and we start to move back towards 110, or whether it doesn't really have much effect and actually Raytheon goes sideways. Which, if it does, tells you all you need to know about the West. But anyway, let's not get Paul onto his rants. Let's move on to Adobe. All right, Adobe, one of the, well, it's sometimes it's a tech darling. But recently, let's say the princes have been chasing the other tech darlings. Okay, Adobe, most of us use it. Okay, in one form or another, whether it's even just basically using a PDF, but we will all use it, etc. Last week's its earnings weren't terribly great. And what was left was we were left with a nice bearish key reversal there. Okay, like bearish engulfing candle, bearish domino candle. All right, okay, and we can see it. What's that, about 537 in the pre. Would not surprise me if there's a little bit of a reaction. That looks like it could be a kind of a bit of a double bottom there, and I would be looking at that maybe a kind of a short-term drift down towards $500, okay, and the 200 period moving average, and then it's going to have to make a decision. All right, that's where I think it would make a decision. Does it basically bounce from there back up to the 50, or do we slice through it? You can see last time it did kind of a bit of a false breaker, really. Kind of tried and then it popped, but I'd now be seeing, with those kind of earnings, with the price action, with a bit of momentum, could that basically push it to A, down to 500, and then B, will it push it beyond that? So you might want to just add that to your watch list. One of the major companies that is got earnings this week has pretty much come to it's quieting down, and to be fair, the interest, the focus is going to be elsewhere on FOMC. But FedEx, okay, they're basically reporting. I think it's Thursday after the market, and you can see once again, we had that bounce there. Okay, was it October 22nd last year? And you can see that did well for FedEx, didn't it? That did well after being in a bit of a downtrend. It's worked its way up. Okay, it's been above. Okay, it's been above its moving averages. Yes, the swings have been pretty deep, I would suggest, but it's ground its way up. Here we are at $300. It's come down off it, but it's not been able to break that 20, has it? Not been able to break the 20. Now, this is a lower high and stuff. And so I'd be interested to see, are we caught here between 300, all right, acting as resistance, the 20 acting as support. There's a nice bullish pin bar there. Is it going to basically drift its way until Thursday? And then, either we get a pop north of 300 or we get a drop north of 280. So, for me, I'd be looking at that, excuse my drawing now, but it's coiling up, and I'll be getting ready to see how that particularly plays out, okay, later on this week. And then the final one, okay, before we switch to live markets, this is XHB, all right? This is the ETF for Homebuilders. And I think I said earlier, there's kind of like mixed signals and juxtapositions, etc. So I do not trade lumber, but I keep a cursory glance on it, and we talked a little bit about it in the stage 2 call last Tuesday. And the reason being is that lumber has been, lumber has been in a very serious downtrend. And there's been some real sort of, real strong bearish days. Okay, which is an indication that there is a, that there is a a lack of demand for lumber. Why would that be of interest? Well, the vast majority of homes in the US are, timber framed homes. And so, of course, they need lumber for that. If the demand for lumber is collapsing, you would think that would be an indication that basically, home builders are diminishing, or rather in terms of, terms of their business, okay, and in terms of people looking to buy homes and stuff. And so you might be keeping an eye on it. Whereas if you look at this XHB, which is the ETF for American home builders, well, you'd probably be getting the opposite idea, namely that how this has been actually really quite a nice uptrend, really. Okay, on the weekly chart here, okay, the 200 period moving average has acted as really nice support. Then we got above, okay, we got above the kind of the 20 and the 50. We came back and put in some very nice bull flags there. Okay, same here. Okay, probably more of a counter trend line or a bit of a wedge there, but still above its moving averages in a nice uptrend. Okay, and here we are. We had a little bit of a bearish engulf, and I don't think it's a key reversal at 120, but it couldn't break the 20, and a little bit like that. We know what we were just looking at before. Okay, I think we're getting a little bit trapped between 120, okay, and the support of the 20 period moving average. Certainly last week, if you look at last week, that was a really bullish engulfing candle right up to the highs there. So you're looking at, is this going to unlock after FOMC? Is the case that a 0.25% interest rate cut is going to be enough, okay, to unlock people's demand to buy houses? Me, in my rational sense, would think no. But then you look at the data this morning, and they're saying the UK house prices are now rising at the fastest for 2 years, just off the back of that 0.25% interest rate cut we had a month or so ago. And that's just probably the sign of FOMO in house prices, and actually how there's pent up demand that basically keeps coming out regardless of the state of the economy. And I wonder whether that's what we're going to see with the US as well. So I would be watching this. Okay, watch this over this next week to see how this responds to not only the FOMC cut, but also the kind of the presser afterwards and stuff, and that how traders or how the market reacts to it in terms of the overall trend for the US economy, and also naturally for home builders. So you might just want, as I said, to add that to the list to keep an eye on. All right, let's switch across to the live markets now then. So just bear with me for a second, and we'll do that. Just bear with me 1 second. Let's see if we can get this tech working. Right. No, that's not what we want. Let's get that out. Okay, so I'm hoping that you can still hear my voice, hoping that you can see the charts. This is a profile of indices. Okay, so what have we got here? Dow, NASDAQ, SP 500, Russell, FTSE, Nikkei, DAX, oil. Okay, just so you can know. And I suspect that basically Russell is probably a good indication of the kind of stuff we've been going through here. Is that if we look at Russell, if you look at Russell there over the last couple of months, there's been quite some volatility there, hasn't it? From really big, strong candles there, okay, in sort of into June, really big, strong push up, followed by a really big bearish key reversal, then supporting pin bar, and then up and down. There's been some real quite considerable swings there, I would suggest. And it's probably a reflection of people's views. And I wonder now, are we into a symmetrical triangle? Is there a symmetrical triangle that's building there? Is it just coiling up? Is pressure building up before the interest rate cut? Either basically fires off pent-off demand, or is there a signal that we're kind of rolling over? Okay, now certainly lots of people, if you look at market historians, are talking about how in September 18th, 2007 is when the US cut interest rates last time, just before the crash, and here we are, September 18th, 2024, looking to cut interest rates again, and they're looking to see, will history repeat itself? I don't think history ever really repeats itself, but certainly there are echoes. Certainly there are, you want to keep an eye on that, and that's what I think Russell has given us a good indication of, that we are coiling up, getting ready for the market to make its move. Okay, and that's just a reflection of that. If we look at Dow, all right, Dow as well had it's been a bit wild, okay, holding above 40,000, but having sold some really strong sell-offs. Last week bang, we rallied our way back up there, okay, on that. After the election debate, the CPI, the PPI, etc., we just basically rallied up and we're back up towards highs. Back up towards high, even SP, maybe not as much, but it's still in the direction of heading towards its all-time highs, which I find fascinating. Nasdaq hasn't followed through, but it's a little bit like Russell, isn't it? Maybe not pretty Russell, but hopefully what you're looking at is you're seeing there is maybe a bit of a counter trend line break, and you're looking to see, is that going to is this week's action and behavior, is it going to unleash that? Okay, so that's what we're looking at. Close to home, it's a bit of a basket case. This is the FTSE weekly. It's a basket case there, isn't it? And they're not helping themselves. Okay, the Rachel Reeves, okay, is there. We've talked about this before. They're doing the budget on the 30th, and really, I don't think anything's going to happen massively in the UK beforehand. We had getting lots of rumours, as you always do in the run up to the budget, but none of that is really, I would say, suggest none of that is really basically, instilling much in the way of confidence there in terms of the FTSE. Also, we look at DAX. Okay, DAX. I've said this before. The economic news coming out of Germany and some of the political news coming out of Germany, etc., is just like a madhouse, really. It's just kind of, and yet the DAX keeps just hammering its way up there, okay, and it's hammering its way up 19,000, okay, that kind of, in the region of those highs. And even though we sold off really strongly the week before, we've nudging our way back, pushing our way back, okay, the on the daily chart, having put in that really lovely key reversal at the start of the month, we come down to the 50, and the 50 is held, right? 50 is held, and now we're back up above the 20. And so you're looking to see, is that going to just trudge its way? Is the cuts in the interest rate into the euro going to actually filter its way through into helping the DAX? We shall wait and see. Commodities, okay. As I said, commodities. We talked about oil a couple of weeks ago and how it had broken beneath its 50, and we're in a. I was looking at this. This is once again in a huge big triangle. We're sat on the support levels of it. We've broken the 200, which had acted as weekly support. Now we're down here, okay. Nudging our way down and lower and stuff. If we look at gold, okay. Gold, I was intrigued by, because I was saying there last week we were up at 2,500, but that price action wasn't necessarily bullish. And I thought, if we go down to the daily, I thought we'd coil up, even though we had this beautiful hold off the 20. I actually thought we might sort of drift our way towards the 50 before making our move up. But it's not waiting for me. Every man and his dog, basically, bang, was hammering into gold there. That's just, what does that tell you about people's views on the overall global economy? It's just hammering its way higher. And the same, if not more aggressive, on silver. We talked about this a couple of weeks ago about how price had bounced nicely off the $30. We're now beneath $28 on the weekly chart. And I thought, well, we're probably going to drift a little bit lower, back down towards 26. But we can see last week on the daily chart, having come down to 28, we actually double bottomed there on the daily chart, double bottomed, and then just larruped our way there a couple of good trading days, and we're way up here, just trading under 31 now. That's quite some turnaround, okay? Quite some turnaround there, okay? So once again, you can draw your own conclusions. An element of it, I suspect, is also just down to dollar weakness, okay? And that dollar weakness now, is that dollar weakness going to continue with after Wednesday? I think if it had been 0.5% interest rate cut, I think it might well have done. I think a 0.25% interest rate cut is the sort of thing that. It's the sort of thing that people will think it's good for the stock market, because it's a reflection that things are okay, that they're in control. Whereas if they'd have gone straight for 0.5%, people might have got a little bit worried or panicky. But anyway, let's have a little look at this is dollar chart, dollar index. As I said, it is back down towards that 100. The daily chart's a better reflection. This is the daily chart. We've been in a really nice downtrend. I was saying last week, I thought, are we going to be in a double bottom here? Double bottom with a nice bullish pinball leg. We identified the VB, and I said, it needs to trade through that to give us conviction that, that is a double bottom that's playing out. But as you can see for yourself, it didn't. And actually, bang, we're trading about 130 this morning. Okay, it's hard not to see us drifting our way down to 100. Maybe FOMC is what basically punches us through 100. Okay, that's watch that. So, the trend is down, and so what's that doing to the rest? Well, the kind of video I put on Saturday, and what I've been looking at is I've got here is that I was intrigued that, here we go, Aussie on the daily, we were basically in between the 20 and the 50, and my view was we would probably pin sideways, okay, until FOMC. Kiwi dollar wasn't as strong in that, but it was still in that region, okay. Euro dollar was basically pinned between the 20 and the 50, as was cable. But as you can see for yourself, I thought maybe we'll just coil up here in front of FMC, but you can see this morning, bang, everybody's selling dollar. Look at that, bang, selling dollar, selling dollar. As we said here, that's basically selling dollar there. Dollar yen, okay, that has basically drifted its way down to 140, big number as well there. So there's I thought people might wait, but clearly they're not. Are they? Clearly not. Is this the pump before a dump? I don't know, to be fair. I don't know. It's just price action in front of me, okay? But this morning was a bit of a surprise. It just gave a couple of nice signals this morning on the intraday side, but as I said, I thought we'd coil up for a couple of days, but I was wrong. That's just basically just blown its way out there, okay? So it's and people are getting ahead of the crowd and selling the dollar. But then on the flip side of that, let's have a look at Japanese yen and then sterling. Japanese yen, okay, as I said, dollar against Japanese yen has just continued on its way down to 140. Pound against yen, okay, is back down to 184. Euro against yen, okay, down sub 156. Swiss franc against Japanese yen. Remember, Swiss franc is number 2 in the STAM, and yet even that this month has just basically given it up against the Japanese yen. And Kiwi against Japanese yen, Aussie against Japanese yen, CAD against Japanese yen. Remember, we want to be trading strength v weakness, and CAD yen has been perfect of that. Okay, we started off, we did a doobie there, and we've just basically been in that kind of direction there, and that you can see that yen strength. That's not, regardless of what the Bank of Japan do this week on Friday. That yen strength is here. Okay, yen strength is here to stay there. Let's finish off and have a little look close to home with sterling. Okay, as I said, it had been a mixed picture. Let's bring that up and we'll look at that. And bang, as I was saying, cable on the weekly chart. We said last week. Remember last week I was saying, what? We're down. I think we drift down to 130, and we did, and we bounced off it beautifully and printed a weekly bullish pin bar there. That is it's a pullback in an uptrend. So perhaps not be shocked that it has followed through so strongly today. As I said, I just thought we might have to wait till FOMC, but as I've said, the daily chart looked on Friday there with a nice, nice kind of PO20, thinking, as I said, we'll just coil a bit, but actually it didn't. And you can see for yourself how last week we talked about it. Bosh, literally pinned down to effectively to the it's the 4-hour chart to 130, and then a reversed strongly off that. And you can see that, and you can see how that's going basically, and that's there's a screen for the dollar there, but it is up against the dollar. But that shouldn't be a shock. Sterling's trading at 3 on the STAM, dollar's trading 8. And what we're seeing here is basically, pound against yen has for the most part been down there. Okay, no surprise. Yen is there. Okay. Swiss franc has kind of been a bit interesting. Remember, Swiss franc is Swiss franc is second, sterling is third. And what we did have, we were drifting our way down here. We couldn't really get above the 50. Okay, we were drifting down a bit of Swiss franc strength. Okay, but what we can see is that a couple of days ago we had a little bit of sterling strength coming in there, right? And whether that is just also a reflection of as I've said all along, the S&P, they don't want the Swiss franc getting too strong and stuff as well. But what we have seen is, let's just do this here, is that we had last week a little bit of a rest after sterling strength. We've had a bit of sterling strength against Kiwi dollar. CAD was interesting because we talked about this last week about how it was up at those highs. We talked about how it coiled, how it then printed last week a weekly bullish, and you can see, it is just literally, it's started the week here. From sort of Wednesday, Thursday time last week, we rallied our way up, and bang, that's gone its way there. Okay, that's broken. The pound CAD has broken to basically, what is effectively yearly highs. Okay, and we've not really been back here since 2020 up to that kind of 180 zone. If you just look at how we popped up there, okay, and you can just see that has just been quite some maneuvering there, and it certainly has. It's broken and flowed its way up there. So that is definitely, and that's just reflecting Canadian dollar weakness and sterling strength. And lastly, euro against sterling. it's, we talked about it consistently, how the weekly 50 has held as resistance, and then we've popped down to 84. I was interested to see, in the daily chart, we were sat above 84. Were we going to get pop up again? But you can see it hasn't. Even kind of, it's just even the kind of the behavior last week with the ECB cuts. It's just going sideways there, isn't it? It's really just not really getting terribly excited. Okay, nothing terribly excited about there. Okay, we're going to have to wait for something to be a bit of a catalyst to get a real move off the euro sterling. Okay, all right. Let's draw it to a close there, ladies and gentlemen. Okay, as always, I appreciate him racing through, because I'm just trying to. I'm trying to share with you as much as I possibly can in the time we have together. I hope you found that helpful. I hope you found that useful. As I said, I'll be doing a bit more on 2 o'clock London time on the Active Trades webinar, and you're welcome to join us. For those of you in the VTP, there'll be the stage 1 call tonight, okay, and the stage 2 call tomorrow. And for the rest of it, it's going to be an interesting week with all those central bank announcements and a lot of other data as well that's coming out. So make sure that you're on top of your news flow. Make sure you're on top of your risk management. All right. I hope you have a fabulous trading week, everybody. And I will speak to you. I'll speak to you soon. Take care, everybody. Cheers.